What up, what up, what up, what up? SPACs attack. How we doing? How we doing? Wake up, wake up. Let's get this going. Let's hit the like button. Let's get started. My mic is taking over my screen, so let me fix this up a little bit here. So how's everybody doing out there? I hope you are having a great day in the market, even though we're getting this pullback. I mean, we've talked about the quad witch and what could happen on Friday today. I expected a down market, but hey, that's just how it is. And that's why you got to know different parts of the market, not just what you're trading, also the overall market and how the overall market can affect your stocks. But let's bring in my man, the brains to the show, Chris Ketchy.
What's going on, Mitch? How we doing today? Yeah, markets, I don't know. They're going.
I mean, here from my boy Rick House. All right, man. Hey, the quad witch is going on. I kind of expected a pullback, and this is the reason why I didn't go too crazy yesterday. I expected some pullbacks. I'm looking to average down in certain plays, especially SPNV. You guys know how I feel about that one. I'm seeing it today. I have a couple orders out, really low, underneath kind of the low of the day today, just to give you some insight. And I'm going to keep an eye on these. You know, there's a couple on the move. But this is your opportunity, I think, with the market pulling back. This is when you got to start looking at what's of value. What could you possibly attack here? So, Chris, I know that we got a lot of headlines. We got a good interview. We got the match of the March SPACness that we want to finish getting through the first round. So let's get right into our headlines so that we can get there and take us back.
Yeah, guys, holy cow. We have an exciting show, exciting interview, and we want to get through that last region of our March SPACness bracket. So without further ado, going to try to rush through some headlines today and those two new deals announced this morning. So going to talk earnings first. So we have lots of former SPACs that reported earnings last night. We have MP, that's MP Materials, reported fourth quarter earnings per share of 20 cents, which be a 5-cent estimate. And for the full year, $134 million in revenue. And I will note that the original estimate from the investor presentation on this SPAC deal was $102 million. So we talk a lot about, those forward-looking estimates. MP Materials blowing it out of the water. No surprise, shares were up in the after hours last night and are up today. We have Luminar, that's ticker LAZR. So they see full fiscal year revenue of 14 million versus a prior estimate of 15.1 million. And then their full 2021 guidance now goes to 26 million, up to 30 million. And the estimate before was $26.9 million. They see book growth of 40%. So raising slightly and coming in ahead of the estimates there. So Luminar shares also up today, and notable that Craig Hallam initiated coverage with a hold rating and a price target of $24 on LAZR. We have HIMS and HERS, that's ticker HIMS. So they reported fourth quarter sales, $41.46 million, up from $41.3 in the last quarter. They see quarter one sales 48 million to 50 million, and full fiscal 2021 sales 195 to 205 million. Shares of HIMS trading down today after that earnings report. And we have UTZ, so ticker UTZ. This is UTZ Brands, Snacks Foods, reporting fourth quarter sales $268.6 million, beating an estimate of $243 million. Going forward, they see fiscal 2021 earnings per share in a range of 70 to 75 cents versus an estimate of 60 cents. Full fiscal year revenue of 1.16 billion versus an estimate of 1.15 billion. Shares of UTZ trading higher, and I am seeing reports on Twitter that UTZ will be on Mad Money with Jim Cramer tonight. So look for shares to continue that strength going into that interview. We have FAII, that's Forum Merger 3. initiated with a buy rating from Benchmark, a price target of $23. Movers from yesterday, those deals, we had SPNV announcing that deal with OfferPad, trading down 2% to end the day. We had ITAC reporting a deal after hours, up marginally yesterday. And then HZAC up 1%. They are in talks with Vivid Seats to go public, that rumor coming from Bloomberg. We have some stocks to watch. So heavy volume yesterday. BTAQ and GSAH. I do own both of those SPACs. Traders starting to circulate, that deals may be close. There was heavy buying of both of those going into, the close yesterday. So some reports out there that deals would be announced. So far, we have not seen anything out there from any news sources. And then turning to our deals, we have ITAC announcing a deal with Arb Robotics. This is a global leader in high-resolution 4D imaging radar technology, working with automotive companies. So they see fiscal 2021 revenue of $7.8 million, fiscal 2022, $13 million. This was done at a valuation of $573 million. And the thing I want to dive into later is Arb Robotics was working with Tesla last year on 4D imaging radar technology for those cars. We're still waiting to see if that connection is still there, and Tesla is a customer of theirs. Remember that Elon Musk has been very vocal about not using LiDAR technology. So ITAC, we could see that relationship with Tesla come into play here going forward. And then SCPE announced a deal with Rockley Photonics, a leading global supplier of integrated silicon photonic chips. Fiscal 2021 estimate of $40.5 million, fiscal 2022, $78.6 million, both of those up over 90% year over year, being done at a $1.2 billion valuation. Seeing lots of people compare SCPE to Butterfly Networks here, and possibly getting some love from Kathy Wood in that space. So keep an eye out on SCPE. This is one that we've been waiting on a deal for a while. They did extend the date. That deal announced this morning. And then some figures to throw out there. So SPACs have now raised $85.9 billion in the first 2.5 months. That's more than all of 2020 put together. That's according to data from SPAC Research. And then a tweet out today from the SPAC king, Julian Klimachko, friend of the show. He says, we've been on quite the buying spree and now own 229 SPACs in the Accelerate Arbitrage Fund ETF. That's ticker ARB in Canada. And he said, in my experience, these market corrections don't last long and generally represent great buying opportunities. We're nearly fully loaded. So SPAC still getting some love out there from the SPAC king. So that's what I've got, Mitch. What do you think I'm seeing? DraftKings trading higher today too. We talked about that all week, right? Heading into March Madness. Sports betting, DraftKings, $71 today.
Hey, yeah, we talked about that. Keep those on the radar. One of the things that we always look at is social trends and how they impact stocks. And this is a clear social trend. And you see how it impacts the stocks, guys. So we'll go ahead and take a look at that. Definitely, hey, shout out to the king right here, 229 SPACs in that accelerated arbitrage ETF. So going to take a look at and see what was added recently. That's one thing that I like to do also is look at the recent ads. If they're taking a risk on this, why don't you do your DD and then see how you could approach these also? It's good way to find maybe some SPACs that some other people approve of, and then you can go ahead and do your own DD and then make your own decisions at that point. It's going to be interesting to see. We still got some earnings to look forward to at the end of the month with Romeo Powers. I'm going to be looking at those earnings, really paying attention towards that earning call. But let's get through that. Let's get into our interview today. I want to go ahead and not waste a second of today. We got so much information to run through, whether it be the interview and also at the end, guys, stick around. We'll be doing the end of our March SPACness And then we got the last bracket to fill out so that we can move into round 2 on Monday. And as we keep going, we'll keep getting deeper into these companies. Now, before we bring on Daniel Cohen, one thing I want to talk about is how many SPACs are really underneath kind of this belt. Chris, before we do that, let's talk a little bit about how many and maybe some of the ones that are under here so that at least if you don't know the whole list, you can start pulling it up before Daniel comes on.
Yeah, that's a great question, and that's something I want to ask Daniel as well. There are a ton of former SPACs and SPACs affiliated with Daniel Cohen. FTOC getting Payoneer. We had PAYA, which already went public. International Money Express, IMXI. We have FTCV, which just announced that deal with Etoro. And then, of course, he is affiliated with some non-SPAC companies as well. So there are a ton of tickers out there. Got lots of questions to get to in this exciting interview.
All right, so let's get into our SPACs Unlock segment here. All right, Chris, let's go ahead and bring on our guests here.
All right, guys, super excited. We have one of the biggest names in FinTech. Joining us on the show today, we have Daniel Cohen. He is the chairman of Cohen and Company, that's ticker COHN, and the Bancorp, ticker TBBK. Welcome to the show, Mr. Daniel Cohen.
Well, thanks a lot, guys. It's great to be here.
Welcome. So I'm going to go ahead and let Chris do some questions, and I'll be back with some of my own, but definitely happy to have you on.
I'm happy to be here. It seems like you guys have a good time from what I've seen so far.
Yeah, we're all about education here. We try to cover SPACs and the whole industry. So we wanted to bring you on. You're a big player in the SPAC market, obviously here. So to start with questions, can you give our viewers just a brief background of your experience in the industry, both financials and with SPACs?
Okay. Well, I think both, the companies of which I'm chairman and at some point had been CEO, Cohen and Company and the Bancorp. The Bancorp is a financial technology bank. We power, a whole bunch of different non-bank financial institutions, Chime, others like it, Varo. We provide services all throughout technology for people who need to be involved in the U.S. Visa and MasterCard system. And we provide an ecosystem for really being part of that. It's run by a great CEO, Damian Kozlowski, and a great management team, and continues to do well. Cohen and Company is focused on more traditional financial services. We actually had been involved in through our broker-dealer subsidiary in underwriting SPACs already, as more than 10 years ago. That's how we got involved as an issuer. We started our first FinTech SPAC in 2015, just launched FinTech Athena and FinTech Hera, which I think are our 12th and 13th SPACs, including the Insu series that focuses on insurance, and that's taken Metromile public in Insu 2. And we're excited for what we see out there. I mean, frankly, we're just excited for two things, one of which is change in financial technology and insurance technology. And the second thing is really the changing consumer experience for that. And finally, the ability that we have to really bring good investment opportunities to institutions and individuals. It's, very exciting for us. So we're going to keep being busy.
Awesome. You guys heard it here, 12th and 13th SPACs from Daniel Cohen. So we talk about the SPAC Hall of Fame on the show. This is a member right here of the SPAC Hall of Fame with, numerous SPACs out there. With the Bancorp, we know it was founded by your mom, who decided to kind of pass the reins on to you a couple years ago. What did that mean to, keep the chair role in the family and keep this business that she founded going?
Well, actually, I was the original CEO of the Bancorp, and then we co-founded it together, and I've served as chairman of the company since inception, really. But it's great. I mean, we built together a fantastic infrastructure. She had incredible foresight to really look forward and see a changing way that financial technology companies would do business. And that was really her transition, was really from her bank, Jefferson Bank, which she sold for a big profit to Hudson United, an old bank that was sold then on to other people. She took a branch banking network and said, I didn't need this anymore. I don't need this in terms of raising funds and funding a bank, and moved into technology products, working with companies ranging from PayPal to Google at various points on different products, and built an infrastructure that is well run in a great ecosystem today. And I'm glad to be a part of, as she really moved on to spirit with me the FinTech Acquisition series of SPACs.
Awesome. So again, we talk SPACs on the show all the time. We talk SPAC market. I'm wondering, overall SPAC market, what's the big reason that some of these private companies are choosing the SPAC route over traditional IPOs in your opinion, and, doing these deals?
Well, I mean, I think for a lot of the good companies, it takes a certain amount of the timing uncertainty out of it. If they're looking at doing something, their question is, do I want to do something today and get something, actually done, and then do all of the filings that I need to do? Or do I want to start out by having a 9-month process really to get my company to the point where if the markets are right, then I can take it public? So the certainty that we really are able to give the companies, we just completed in FinTech V a $650 million private placement, in FinTech Olympus a $400 million, and to give companies the certainty that they can really go public and have a successful transaction, before they really have to start off doing the IPO filing. That's a big motivation today for people.
Awesome. So, I have to ask the question. We talk on the show, we're seeing hundreds and hundreds of new SPACs out there, record amounts of money being raised by SPACs, new groups, forming these SPACs. Do you think we've reached an oversaturation point and we need to see less new SPACs issued out here to kind of bring the market and the timing of these SPAC deals, back in the positive for these deals?
I don't know. I mean, I think there's definitely a certain amount of saturation in the market, and I can't keep all of the various deals apart. But I do know that, like, I saw Athena Acquisition Corp trading slightly below $10 on the units, and I was like, well, maybe I should buy that. And there are some good SPACs where you basically have a lot of optionality built in. So somebody asked me why we started to do SPACs and why don't we do IPOs? And I said, look, we're managing a decent amount of money, but we wouldn't get $30 or $40 million allocations in IPOs. And as an institutional investor, I can get that in SPACs. As an individual investor, I can start, day one. You just have to be careful. You have to be with serious people, I think, and you have to be focused on making sure you do appropriate due diligence. So as a sponsor, we do the same thing. I don't know whether the market is really oversaturated. I do know that there will probably be a number of SPACs that don't get combinations done, but there will be a lot of SPACs that do, and a lot of great companies that go public.
Awesome. So, you mentioned your 12th and 13th SPAC out there. We've heard Chamath Palihapitiya mention he wants to do IPO A to IPO Z, which would be 26 SPACs. Do you have continued plans to keep, launching new SPACs going forward?
As long as we have visibility on the fact that there will be good companies to take public, yeah. I think we like investing in the companies we like. We focus on fintech and insurtech. And we think that there are continue to be good companies that, should go public and that people should own. So we're going to continue doing it. We don't have the same program he does. We just don't have the vision that he does. We're more focused on being operators in relatively narrow segments where we know insurance, because I've been investing in insurance companies since 2004. We know financial technology. We know insurtech. We're part of that whole entire ecosystem. Chamath is a great thinker and a big thinker, much more exciting than we'll ever be. And I think people will make money with him in his way. And there certainly should be 26 companies for him to take public.
Awesome. So, we're in the middle still of the pandemic right now, which has changed the business landscape and the deal-making process. So how has the pandemic impacted getting some of these SPAC deals done in terms of doing due diligence and also having, Zoom meetings or in-person meetings with the potential targets?
Well, a lot of the targets are people that, we've known for a long time. In terms of due diligence, a lot of it was being done electronically in any case. I mean, a lot of it is documentary due diligence. I've been acquiring companies since the 1990s. And whether you send a lawyer to sit in somebody's office to go over documents, or whether you get electronic copies of those documents appropriately, that all seems to work. From an actual operational due diligence point of view, there's a lot more that you can do, and you can look globally in terms of looking at operations and meeting with people globally via Zoom, and doing background and all of that other work that we obviously get done. All of that can get done. It obviously makes it a lot faster. I happen to be a believer that things will slow down a little bit after, once we get into 2022 in terms of really going and meeting people. But we're starting to see that now, and it really isn't slowing us down all that much. I mean, we typically always go and meet with the people we're going to acquire. It's very hard to do it, 100% by Zoom.
Perfect. So, one of the most recent deals announced was Etoro. So that's ticker FTCV. The deal valued Etoro at $10 billion, which was, a significant increase from their last valuation from a funding round. So can you walk us through a little bit why the $10 billion valuation, for a company like Etoro?
Yeah, I mean, look, Etoro is cheap on every metric that you look at it. It is a powerful generator of earnings. It's a powerful generator of revenue. It's a powerful generator of growth. It provides fantastic services and a combined social and investing experience for people that's unique. So if we look at it in terms of a multiple of revenue, it's cheap to something that's as old school as Interactive Brokers. If we look at it in terms of pre-marketing EBITDA, it's also extremely cheap when you look at it as in terms of traditional financial services. The company is just continues to do well and continues to grow. It's grown faster than people have expected. We've known the company for a long time. We're very bullish about a number of the changes that have happened that have really increased the lifetime value of the customer and a lifetime customer and the interaction that people have with the platform. And what I would say is that if you're, in a jurisdiction where you can use eToro's full functionality, you should go and try it out. And as more of that functionality comes online in the United States, I think U.S. consumers are going to find that it's a very compelling format. One of the things that it does particularly well is that it really opens up in its social, in its copy portfolio, in its social investing way, it opens up the ability for people to share ideas with each other in a more effective format, somewhat moderated. within a brokerage and investing context. So, if you take a positive viewpoint towards the collective intelligence of all the investing public, then it's probably something that's going to have a major beneficial and salubrious influence on the investing public.
Awesome. So you hit a little bit on the U.S. part there. That's the part that stuck out to me in the presentation is, Etoro looks like they're just beginning with the U.S. expansion, in terms of stock trading and some other options. Was that a big part of getting this deal done and that valuation, then the potential growth of the U.S.? And what's the timeline look like for that going forward?
I think, look, Etoro shouldn't have more than 15% of its revenue in the United States for a number of years going forward. All the material is really, contained in the filings that we made. And if we look at it, the key element going forward is really the revenues globally, which we think are very strong. The revenues are primarily European, Southeast Asian, so Asia ex China and Middle Eastern, as well as elsewhere. And we're just excited about, the whole entire worldwide growth. It's a strong brand in its jurisdictions. It has strong participation across, the UK, across Germany, across France, and elsewhere. And we expect, substantial inroads in the United States. And that's really a plus for investors, is that upside of growing in the United States tremendously well. So
another recently announced deal was ticker FTIV, Perella Weinberg. Can you give us kind of the thesis behind, that deal and what investors can have to look forward to after that merger?
Yeah, Perella deal is a very strong company. With a strong brand name, with operations across the U.S. And Europe, that focuses on independent mergers and acquisition advice for companies. We think that we're at the beginning of a new M&A cycle, as well as a new, as well as continuing a restructuring cycle. So it's a unique time for people to invest in an independent advisor. We think that the company is extremely well positioned because of its size to outperform. We think the management team is tremendous. That Peter Weinberg, who had a significant role at Goldman Sachs before forming Perella Weinberg, and the team that really started this out, and the team that they've grown, because they have 55 strong partners from all over Wall Street that have banded together to really form a very entrepreneurial and unique culture for an independent advisor. We think that they can drive growth and drive, the creation of wealth, both for themselves as shareholders and for outside shareholders. We're excited to participate.
All right, I'm going to jump in here and talk about one that's been on my radar here. So FTAC with Payoneer. And one of the things that's going to stand out to me, and let me go ahead and get this to my right screen here. All right, so I'll go ahead and I'll pull up here. It's the compelling relative valuation. One of the things that I'm focusing on is revenue multiples here compared to, let's say, a PayPal, Bill.com, Square. Can you explain how Payoneer really has the advantage here in their revenue multiple, and how the growth in the long run, and we're seeing here growth mentioned here, 25% for 2022. How's that going to compare in the long term with these kind of giants that have been in the industry for a long time here?
Well, I mean, I think that, you're seeing the growth that's along the line of the more direct, payments groups. One of the things is that Payoneer has invested heavily in building infrastructure for doing global payments. And that's not really cheap. That's not, one of the nice things about payments, if it's focused on the sort of processing and customer acquisition, merchant acquiring that PayPal, well, really Adyen and Square really are doing, or if it's focused on the repeat business that, Bill.com and PayPal are really focused on, it really is something that has a high gross margin, which is a great business. I mean, if you're making 60 to 70 cents of every dollar, before overhead charges, and then you can manage that on a relatively, manageable overhead, you have a great business. Payoneer is at an earlier point in its cycle. It's continuing to grow revenue extremely well while it's absorbing the infrastructure and the moats that it's built, in order to do that, because international payments and the type of B2B and B2B2C payments that Payoneer is really doing is a fantastic growth area that should outperform lots of other fantastic growth areas. They service very profitable clients, and they have a wide range of services that they really can expand to service those clients, as well as the ability right now to continue growing, absorbing the overhead, continuing with a high gross margin, but then really, producing real profits going forward. So that's why we're so excited about the company and the inflection point that they're at now. We think that as a public company, it should be able to acquire and grow very nicely, and that it should, be a long-term winner in a segment that continues to do well, where they will continue to innovate and continue to service their, international group of clients.
Yeah, it's one thing that I've noticed that how fast really the pandemic has changed our digital transformation. I'm sure that's something that you noticed definitely got pushed forward, and maybe the reason why so many SPACs are coming out is really that push into digital and that transformation. Is this kind of what you're seeing out there? Are you still seeing this massive transformation into digital?
Yeah, I think we see it accelerating in a lot of ways, and just continuing. User acceptance is, getting greater and greater and greater. And, Payoneer is one of the elements that, as people move towards a totally digital international payment systems, will really be in a fantastic position to move forward.
Awesome. So, I want to dive into a couple more of the deals that you got done. Metro Mile was one that stood out too. You mentioned the insurance side of things. So this was a deal that also, Chamath Palihapitiya was part of that pipe. Mark Cuban is an investor in Metro Mile. They've both talked about that company being a disruptor in the insurance market. Chamath said it's his version of Geico that Warren Buffett had. Can you walk us through, Metro Mile going forward? How big of a disruptor is it going to be in insurance?
Look, I think it's an enormous disruptor, but it's a company that's also owned by some very strong insurance people. We've invested billions of dollars in traditional insurance companies over a long time. Hudson Structured is also a fund that has a significant investment in the company. And has had a tremendously positive influence on the company moving forward. So it's not just a disruptor. Like, there are a number of disruptors in insurance, and some that are, fantastic. Like, we have incredible respect for, Asaf Wand at Hippo. But Metro Mile, we think, is a company that can continue to grow, and it's going to change the way people do auto insurance and benefit those people who drive less and drive better, because it's going to charge by the mile based on your own individual risk. And right now, it's started off, I think it's in 10 or so states. It should be nationwide by the end of 2022. From a financial point of view, it's a great situation. It's what financial technology is all about. It's about making more money for the institution while saving more money for the customer by doing it in a much more efficient way. It also has a fantastic suite of, loss adjustment services that it's also going to be able to sell to insurance companies. So we think it's going to actually not just revolutionize its own experience, but also revolutionize loss adjustment in a number of other insurance companies with which it already has strong relationships.
Perfect. So, we saw the SPAC market really became, a trending topic in 2020 with, the large number going public this route. But you've been in this game, for years before that too. So I just wanted to back up, and some of those deals that you got done before, the big trend came in. So like International Money Express, that's IMXI, getting done in 2018. What's the thesis there, and what can investors look for, in this former SPAC?
Look, that is a company that is cheap, right? It's a company that's growing nicely. And the nice thing about growing companies is that they represent good value after a couple of years. It's a well-run company that's focused on a money transfer in its industry that's not going away, primarily to, Latin America, as well as to Africa. It continues to grow and provide services to its clients by providing better services using electronic, but not necessarily electronic for customer acquisition, but innovating the actual process of what it's doing. And it's gaining market share from those people who are just not serving the customer particularly well. So just like, Southwest Airlines, by offering routes that people want to fly on and offering them cheaper based on a better organizational experience, is able to make a lot of money. So is International Money Express. The CEO is fantastic. Management is fantastic. Their results have been fantastic, and it's cheap at its current price.
Awesome. So, but before we let you go, we've got some questions from the chat. I just want to get to one here. Someone asking again, Etoro, popular topic this week with that deal. So Thomas from the chat asked, how does Etoro differ from Sofi? What's the big differentiating factor there?
Well, I have to admit, I don't, we know Sofi somewhat. Sofi is trying to serve, it's much more of a lender. So it's making money by lending money to people and securitizing those assets. And I think it also takes some deposits. I would say it's looking to be a bank in some ways for people. Etoro is not a bank. It's making money by servicing people in two ways, one of which is, it does have a strong social orientation where people are able to share portfolios and copy top quality investors in terms of what they're doing. And it's much more focused on individual investors who want to take control of their own individual investing rather than, other things. Sofi started as a student lender and it's expanded to doing all sorts of lending businesses for high quality individuals. But that's what I know about differentiating the two of them. They're two very different businesses. So.
Awesome. That's going to do it from questions. I know we kept you for a little bit here for this interview. We appreciate the time. So again, joining us on SPACs Attack, exclusive interview, Daniel Cohen, chairman of Cohen and Company, ticker COHN, and the Bancorp, ticker TBBK. And, as he said, 13 SPACs, a member of our SPAC Hall of Fame here. So thank you, Daniel, for taking time out of, I'm sure, your busy schedule to come on the show today.
No, I enjoyed doing this. I hope to get a chance to do it again. And it's nice to be able to work with my mom so we both can do lots of different stuff. So
yeah, we'd love to have you back on. We've got so many more SPACs to talk to you about, I'm sure. So thank you again.
Thank you. And I'll look forward to being back on. Take care. Bye-bye.
Thank you. I think you're muted there still, Mitch.
Like he said there, Daniel stuck around. And one of the things that I caught that he mentioned the very beginning, guys, he said, hey, you guys look like you guys have some fun here on SPACs Attack. I think we have a fan in SPACs Attack. I think he's going to be watching us and who knows, maybe getting some information from us and making some investments. And that's what it's all about, guys. That's what we do this for you guys is at the end of the day is to get this information. Now we got a giant from our Hall of Fame right here, right to you guys. So definitely do me a favor, smash that like button. If you got the value, hit the like, hit the subscribe bell. What you thought of that, Chris?
You know, that was insane. Like they launched their 13th SPAC, and they're hitting the fintech space. They're hitting the insurance space, two industries that him and his mom, you know, have been in for decades. Tons of experience, tons of DD there. You know, I would put myself on board with any of the SPACs, you know, from this group with their experience. So that Etoro deal, you know, I'm loving the comments he had on that too. So everything sounded great to me.
Yeah, I'm seeing mention of what's his next SPAC. I heard him mention another one, but I did hear you guys could look up FTAC Hera Acquisition. Still trading in units. HERAU is the ticker there for you guys. Let me see if I can put this up here. Just want to make sure that you guys get that ticker correct, because if you don't, I know how that is.
Yeah, HERAU looks like it's trading at about 10 right now.
Yeah,
you know,
800 million.
So
800 million.
Good.
I mean, they got some money in this one at least. One of the things that I did notice is that if you look at their prior one before that one, it went down to 200 million. And then this one goes up to 800 million. To me, that shows that they possibly already have someone in mind. If they needed more money in this one, it might have been for a reason. All right, guys, so let's go ahead and let's get into our fun time of the day. If you can do me a favor, smash that like button while we play the rocket. All right, guys, so let's get back to our March SPACness. You know, so one of the things that we wanted to do, guys, is have some fun, guys. You know, we've been having some fun with the March SPACness. So, hey, if you guys like the March SPACness, let me start seeing those one roll through in the chat, guys. Put those ones. Let's see them, and let's start getting through here. All right, so we got about 13 minutes left. I might push Power Hour back a little bit. They can wait. All right, so let's get into the March SPACness here, guys. So this is our Midwest side. I know. It started yesterday, guys. I know. But hey, let's have some fun. Let's talk about some SPACs. Let's talk about some matchups here, and then we'll get rolling through here. So first up, QuantumScape, guys. QuantumScape versus Landsea Homes. All right, so that's going to be ticker QS with LSEA here. What do you think, Chris?
Yeah, so guys, hit 1 for Quantum, 2 for Landsea. You know, this is a 1 versus 16 matchup. QuantumScape, a powerhouse. This was a SPAC that was over $100 in 2020, the highest trading SPAC of the year. It has come down since then. Again, this is a battery company, pre-revenue, that you have to be a little patient with here. And then Landsea, you have a home builder trading below $10, which could offer some good value, you know, before the end of the year. So 1 for QuantumScape, 2 for Landsea. Which one's going to have the best end of the year here? I'm seeing so many 1s, so no surprise. It looks like the 1s have it. I think you're muted again, Mitch.
Oh, good Lord. I'm going to get points taken off. I'm going to get points taken off for that one. All right, so like we said, QuantumScape moves on. Let's keep going down towards the next battle where it gets actually a little bit closer here, guys. We got Clove, ticker CLOV, Clover Health versus Hims and Hers. What's going on here, Chris?
Yeah, what a matchup, you know, that we made here. So Clover Health and Hims and Hers, both in the healthcare space, you know, hit 1 for Clove, 2 for Hims. Hims was a former ARC holding that they, you know, dumped to the side of the road. Clove, a Chamath SPAC that has fallen below $10. I know you talked about Clove yesterday. Hit 1 for Clove, 2 for Hims. If I had to pick which one by the end of the year, I'd have to go Clove just based on the valuation and the chart here. So I'm guessing that's your pick here too, Mitch. Oh, I saw a 3. Someone put a 3. That's also a popular pick on this matchup.
Well, hey, I'm not losing any hair, so I'm gonna go with Clove. How's that one for you?
Oh, this one looks close.
Hey, man, I guess there's some people getting some little bald spots, right here in the scratcher. I actually had a friend that used Hims, and he got his hair back. I'll tell you that at least.
I'm seeing 2s, but this looks close.
Do you know anybody that uses Hims?
I don't. The thing about this company that's interesting to me too is it's ticker Hims, and it's called Hims and Hers. I see commercials for the Hers part on TV with Jennifer Lopez and some skin cream.
Hey, so they expanded.
I don't know. So maybe we need to change the ticker to Hers to get this stock some love with J-Lo.
Hey, it's just how it is, man. They realized Hims worked, so why wouldn't Hers work?
Well,
all right,
who do you
guys.
think won? I saw more 2s, I think.
Oh, we're seeing some 2s roll through there. Man, this one's a close battle, dude. All right, I won't go with 2 here. I'll go with 2. All right, we'll give it to the Hims. It's grown some hair here and took the win. Let's get into Butterfly here, the new image of health versus Pure Cycle Technologies here, guys. So I'm pretty sure it's ticker PCT, but I need to make sure on that one.
Yep, PCT. So Butterfly portable ultrasound. Pure Cycle is a sustainability plastics play here that just completed that deal not too long ago. So this is 2 SPACs that are, both former deals trading, at decent ranges. We have Butterfly in the 18s, and you have, the other one trading, higher than that still. So I'm a big fan of Butterfly and that technology going forward. And of course, Kathy Wood loves the company. So I would have to hit a 1 here, and looks like we're seeing the majority of 1s roll in.
Yeah, we'll have to take a look here. One thing I noticed is that Butterfly, I know a lot of people believe in this one, but for some reason, something's leaning me towards that Pure Cycle technology. I don't know why, but that's where I'm going to lean on this side, guys. I'm going to be on 2 on this one, but I'm pretty sure I'm going to see some 1s. There they are. There's those 1s. I expected it. There you go. Put some hair on your chest by Ruel. Hey, I can't blame you here. All right, so let's go ahead. Hey, Butterfly wins, guys. The new image of health, guys. The new image. All right, let's keep rolling through here. The next one up, we got Open Lending versus a brand new one here that just switched over, Advent. And the ticker for Advent, just to make sure, is it AVT?
ADN.
ADN. There you go. I had that one wrong. I had feeling there. All right, so there you go. Hey, so we got Open Lending here versus ADN here. What do you think?
Advent is a fuel cell hydrogen play here, and Open Lend is automated lending, trading at $38, has been a pretty well-performing former SPAC. So I would have to go with the trend there and, go with Open Lending. Hydrogen fuel cell, I still think, might not be as popular going forward, and I think it's going to be a tough market to roll out that infrastructure. So I would lean a 1 here, but I think this is a kind of a toss-up.
This is. I would say that, don't count Advent out, but I'm going to go with Open Lending. Why? Because I feel that right now we have a housing boom that's starting. And with the housing boom, I think you're going to see some great revenues come out of Open Lending and kind of, a bunch of different places. With that being said, I will say a 1, but let's see what we see here. All right. What's going on there? Oh, looks like someone saying hydrogen could be huge.
And that's true. It could be.
We'll keep an eye on this one here. It looks like I'm seeing some 1s roll through there. So 1 wins the game.
1s, but we did have some 2s there. So
let's keep moving on to another big battle here. I think this one's going to be an interesting one from the chat here. What do you think here? We got a battle. Introduce this one, Chris.
Yeah, so we got Virgin Galactic, that's SPCE, against Vivint Smart Home, ticker VVNT. Interesting matchup, 2 very different sectors. I do own shares of SPCE. For me, if we're looking at 2021 performance, I think there's catalysts that can't be ignored with Virgin Galactic, with that new space ETF and that scheduled, space flight for their passenger business. So to me, I think Virgin Galactic, but smart homes too. What a growth area. So this one could go either way with the chat. What do you guys think? 1 for Virgin Galactic, 2 for Vivint.
All right, guys. So one thing that I would mention to this one is, one thing, I'm going to go with the booming housing right here. You guys would thought I wouldn't go for the smart home. I'm actually going to go for the smart home here. I think in the long run, Virgin's going to have a hard time really creating revenue here. But I'm going to stick with the smart homes here. And with an upset, I'm going to say 2. All right, so I'm seeing some 2s roll through there. I'm seeing some 1s and some 2s. What do we got at the end here? Do we see some other 2s roll through there? I think it's a close battle right now.
I had it tied, but now I'm seeing a couple 2s roll in last there.
Yeah, they're starting to get there.
I think we have to go with 2s here based on that end.
Oh, looks like the end there, the guys.
We had, there was 5 straight 2s at the end.
Yeah, man, so there you go. We'll see what happens. Hey, I agree. We have to keep an eye on how fast really SPCE really gets into those revenues. We'll stay with the smart home and the upset here. So, hey, we might have a Cinderella story here in Syracuse, but we'll keep an eye on this one. All right, let's keep going. Next one up, we got Velodyne
LiDAR. And
I can't speak today, guys.
So we got VLDR against ETWO. So this is a LiDAR company against a end-to-end supply chain management company. The thing here is E2, former SPAC, trading at 10.08, which I think may provide some value going to the end of the year. And as I've said with LiDAR, it is a crowded market. So hit 1 for Velodyne, 2 for E2 Open. Loving the comments, you guys. Holy cow. I also noticed one about a J-Lo double bottom on the chart. Thanks to whoever put that in there. I would have to go with 2 here for E2 Open based on the share price.
Hey, we'll see what happens here. It's going to be interesting. We'll have to see. But in my eyes, I mean, here I'm gonna stick, at the top here, a 3 seed, man. And West Virginia, I think he's going to move on here. Looking like I'm seeing the 1 starting to roll through here, and I can't blame that. Yeah, I believe it too. Mars 2025. Let's do it. I won't be mad if we go to Mars. They can sign me up. I'll be the first one. All right, let's keep going through here. We got about 2 to 3 minutes left here. So I want to get into the next close battle here. This one's going to be an interesting battle here. This is a 7 and 10 seed. You got Ava, and you also got here United Wholesale Mortgage. What's going on with this one, Chris?
Yeah, so ticker UWM against AEVA. Again, I think LiDAR is crowded, but UWM has been a dog since they went public. Even on the rocket earnings, that short squeeze, UWM couldn't really keep the momentum. So I worry about, them getting positives throughout the rest of the year. So I'm going to have to go the upset here. So I would put a 2 for Ava. But again, you guys pick which one you think is going to perform best end of the year. 1 for UWM, 2 for Ava. What do we got? What are your thoughts, guys?
Well. I don't know if I might try to do the Mitch effect. I heard Thomas calling it. So let's see what happens here. I'll tell you right now, guys. I'm not a big fan of United Wholesale Mortgage. Haven't been a big fan. I think I've been pretty public about it. I like Rocket and I like Finance of America better. You guys have seen Patty Cook on here. If you haven't seen her interview, check it out. See the kind of where they're getting their revenues from, and see if UWM is going to hang on here. But let's see what else we got. I'm seeing some 2s rolling through there, some 1s and 2s. What do you think, Chris?
I think I saw more 2s. I feel like the 2s have it.
We'll have to take a look here. Looks like somebody's a Rocket fan. I can't blame you. They're probably upstairs in the office. So if you don't know that one, they're definitely right there. All right, so I'm gonna say that this was a battle, but I'm gonna say 2 wins the game here. 2 wins the game. Rutgers moving on. If you guys don't know, Rutgers hasn't been in March Madness. I think it was like 20 years or something like that, Chris.
Yeah, it's been a while. That Big Ten conference has been a beast this year, getting the most teams in there, and of course, I have to say, go blue. As we look to March Madness this weekend, we got one matchup left, Mitch. We almost made it. It's noon. Let's finish up. We got Skills SKLZ against Metro Mile MILE. Which you just heard Daniel Cohen on the show. He's a part of that deal. Chamath is a part of that deal. Mark Cuban's a part of that deal. Hit 1 for Skills, 2 for Metro Mile. If you would have asked me a couple weeks ago, I probably would have said Skills. But, with those big names on Metro Mile, I'm going to have to throw my hat in the ring for MILE.
All right, guys. Well, we'll definitely have to see it. Looks like SPAC Broker saying that Mile deserved a better seed. I can't blame you. I was trying to do this all day long, but hey, it's just how it goes. But I'm going to say
right off the top, this is fun. Let's
out the top, guys. Skills, just because the name Skills. I see it in the chat. I see the love. There's some 2s there. Could they turn me around? Do they make me want to erase this? Some twos. Oh, look. You know what, guys?
Lots of 2s now. I don't know
what? I'm gonna have to erase that one. I'm gonna X out Skills.
Shouldn't have used that Sharpie there, Seth Davis.
Oh, don't worry about it. Hey, guys, I'm gonna go ahead and I'll X out Skills. I'll X it out, and then we'll go with Metro Mile here. But like we always do, guys, definitely stick with the SPACs attack. This is what we do, guys. We have fun. We talk some SPACs. And if you liked it, definitely smash the like button. Hit the subscribe bell below. Up next, you got my man, Hot Stocks Lukes. I see Dippity Dip in the back. You already know. If you're ready for Power Hour, let me see. I want to see the word Luke run through the chat. Just the word Luke, Luke, run it through there.
Luke into the chat if you want to hear from him. Quick programming note: we've had interviews all week long with CEOs of companies. Stick around though; you're going to hear from 2 people with SPAC deals on Power Hour today. So you got ticker NEBC taking Rover public. That's the dog sitting and walking company, and you got NSTB taking Apex Clearing public. So 2 SPAC deals coming up on Power Hour. We got an exciting day of programming. Don't forget to keep an eye on those sports betting SPACs today before market close, and ticker UTZ on Mad Money tonight. Have a great weekend, everyone. Go blue. Let's hear it for Luke.
All right, guys. So starting up the number 1 show, the Power Hour.